welcome back to the channel. It's been a little bit. Thank you for joining me. Make sure you like, make sure you subscribe, make sure you check the links in the description. Follow me on Twitter. I do a lot of stuff there, and check out some of my other things. You might find stuff interesting. Today, we're going to go over a bunch of things in a very short period of time. So this should be an informational, useful video, but it also shouldn't kill too much of your time. We're going to first look at some Bitcoin on-chain metrics. I want to show you like an overall picture, right? Nothing too in-depth on any one of them, just an overarching picture so you can kind of see a larger, you can kind of have a larger idea of what's going on-chain. Then we're going to look at a few important articles, only 3 of them, and they're not going to take long. Then we're going to jump into the Bitcoin chart and wrap up with the EGLD chart. Here we go. Let's get moving. Like, subscribe, game on. All right, first thing, crypto quant. Now, when we look at crypto quant, I'm going to jump through a bunch of the different metrics. The first one we're looking at is just net flow. Okay, so the 0 level, pretty simple. Anything above the 0 level is an inflow. Anything below the 0 level is an outflow. Inflows are Bitcoin going onto exchanges. Outflows are Bitcoin leaving exchanges. So what we are seeing here since August, if you eyeball this, you're seeing much larger outflows than inflows. That's just eyeballing it is what's showing it to us. Now we're going to zoom in a bit to what's been happening just over the last couple of months. All right, this is November through March. That's what you're looking at on the screen. Massive outflows in comparison to inflows during that time. A lot of Bitcoin leaving exchanges. Okay, that's one thing. Let's look at a hash rate. We're going to switch over here. When we look at the Bitcoin hash rate, you'll see over a long period of time, the hash rate has been going consistently up. We had a dip during the first major drop last year in 2021 between May through July. The hash rate went down significantly. That's related directly back to what happened in China, banning Bitcoin mining and all that kind of stuff. So now we've had a recovery of the hash rate, and the hash rate is near all-time highs, right? That's number 2 of the puzzle. Let's go back to the Puell multiple. Puell multiple tells us how profitable it is to be a miner. When we're looking at this, we're seeing that it is pretty unprofitable right now to be a miner. If you're looking at historical trends, we are basically as profitable now for miners as we were in September 2020 when the price was around 13,000. Now, why is that? Well, the next thing you look at is difficulty. The difficulty has gone up to all-time highs. This is the mining difficulty. This is how difficult it is to get Bitcoin rewards by mining. The more difficult it is to mine blocks, well, the lower your Puell multiple is going to be, right? If it's harder to mine blocks and the price is lower, that means you're expending more energy to produce less Bitcoin. Hence, Puell multiple is low, meaning miner profitability is low. Now, what's important about this is that you've been seeing net flow going out. You're also seeing that it's not as profitable for miners to sell. That means miner sell pressure is going down. We look at the reserve flows, and then we start to see something very, very interesting here. All right. We've looked at this before, so I'm going to show it to you again. Miner reserves in orange here at the bottom continue to go up. Miners are still buying Bitcoin. Red is the exchange reserves continue to go down. The amount of Bitcoin on exchanges is depleting. And price is in this major consolidation triangle, which it looks like when it breaks out of, we're going to see some magic happen. All right, the final thing I want you to look at is just purely the exchange reserves. All right, we're looking at the daily right now, and on the daily exchange reserves, that's the blue, that's the amount of Bitcoin on exchanges continually dropping at near all-time highs again. You can see that, or all-time lows again. Actually, you know what? We got to be a little accurate. This is not all-time lows. So if you look at the exchange reserves and you zoom out, all-time lows are really, really low. The amount of Bitcoin on exchanges was super low early on in like 2015, 2016, earlier than that. Well, obviously, the amount of Bitcoin on exchanges increased as you mined more Bitcoin, as there was more supply and it became more popular. But now what's happening is as the price is continually going up, we have reached an inflection point during the March 2020 crash where the exchange reserves are dropping and the price is moving up. And now what's happening is we are just continually reaching multi-year lows. This is from 2020 to now. We are at the lowest point that we've been at. If we go to the block level, it makes a little bit more sense, right? You look at the block level and you see that since this entire jump, right, we have seen that the exchange reserves have kind of followed the price. Look at the last few days, right? We go back to like from the 24th to now. That's what we're looking at. You'll see that the exchange reserves started spiking up, right? The blue line's going up. Orange is our price. The price was also going up to around 48K. Well, now what happened? We had a dip of the price, and during that entire dip, you saw the exchange reserves drop. So that's telling us 2 things. As the price was consolidating here, well, what was happening to the Bitcoin on exchanges? It was exiting. the amount of Bitcoin on exchanges was exiting. So people were withdrawing at these ranges, which is still very, very bullish. So we've gone over everything here, and this tells me miners are less likely to sell. The amount of Bitcoin on exchanges is still dropping. The price is still moving up. If we're looking at this on a strictly on-chain and correlation of price to supply ratio, then you're looking at something that is just developing this larger supply shock. And at a certain point, things are going to reach that inflection point where the supply can no longer sustain the price, and the price is just going to have to shoot up, right? So anyways, all right, let's move on now to a couple of articles. The first thing that was interesting that had a lot of effect on price recently was this. This is the EU taking an anti-money laundering stance against anonymous crypto transactions. Essentially, this first line really tells us everything. It says the European Parliament voted in favor of an anti-money laundering legislation which requires every crypto transfer to be reported to authorities. The legislation cites the use of unhosted wallets as potential avenues for money laundering. So essentially what this is saying is no longer can you make transactions peer-to-peer using crypto. Any transaction you make has to be reported to the authorities. Well, to be honest with you, I need to look into this a little bit more. I need to see, is this every transaction, or is it a transaction over a certain amount of money? That's a good question. And I really haven't dug into this far enough to see how detailed they've gone about this. But, if every crypto transfer has to be reported to authorities, you're talking about pennies in some transactions that are just transaction fees or due to smart contracts. Where are the rules? Where's the delineation? So we really need to know that. And I haven't looked into this deep enough to know that, but I know that this has been a big reason for why we have seen, so much volatility lately. So this is one big thing, and this is worth looking into more. I'm not going to do it in the short video. We might do it on a podcast very soon. Next, we look at Russia enforcing the ruble payments for energy. This is pretty hilarious. So the value of the ruble is crashing, right? So what does Russia do? They go and say, if you want to buy our gas or if you want to buy our oil, well, you know what you have to do? You have to buy rubles and you have to pay us in rubles. So I thought that was kind of funny. We'll see what this really does. I don't really know what this is going to do, if you're going to see a lot of people buying more rubles because of this, if countries in the EU are going to buy rubles in order to trade with Russia. I don't know. We're just going to have to see what happens here. I find it more likely that down the road, Russia, Iran, and a couple of other countries move to the Chinese yuan and start using that as their reserve asset, because that will keep them free of sanctions from the United States, unless China decides to impose any sanctions of their own. We don't know. So that's kind of what I'm looking at as far as what I think is going to happen. I just thought this was kind of funny. Anyways, next we are moving on to U.S. Congress makes recommendations on blockchain technology. So this is interesting. A U.S. Congress agency has released a report, and I'm just going to go over a few key things about this. Possible applications for blockchain technology: finance, government, supply chain management, organization, and management. So basically, they are finally, a Congress agency is finally telling Congress and the rest of the government, hey, this can actually be really useful within the government, help with our supply chain, help with organization management, and it can actually help with finance. Who would have thought? So we are looking at the wheels starting to be in motion. This is really what you want to see in Congress and in other agencies. So this is very interesting. Keep an eye on this. We are going to go over this a lot more. There's a lot of detail on this that I haven't gone over yet. I've looked over the article, but I just wanted you to be aware of this. We're going to have to look in this in a lot more detail. That'll be coming in the near future. Next, we're going to do the charts. So the first thing that I want you to see on the chart really is on this hourly, all right? When you look at the hourly, there's a couple of things that you see, right? If we look at this, we know one thing for sure. We know we're putting in a flag right now, right? We know that. That is very clear. You can see it. If I draw it, it's right here, right? This is basically a typical bull flag coming in on the hourly, telling us that we are more than likely going to have a breakout somewhere around midnight Eastern tonight, right? That's when we're going to be expecting a continuation to the upside, because that's where this pattern is continuing, and the breakout target is actually going to be the size of that pole. So it's, according to this, the breakout target would be somewhere around 48K. So that's one thing we're seeing on the hourly, but we really need to look at everything else. That's the simplest form of TA. So the next thing that we're looking at is, well, what are the moving averages doing? Well, the moving averages are getting pretty constricted. Okay, that's interesting. So let's zoom out, and then let's pull up the Bollinger Bands, which we know are pretty important when moving averages get constricted? Well, the first thing you can see is the last time the moving averages got really constricted was over here. And when this happened, this was on March the 27th, that's when you had the breakout. That's when you saw us go from 44,000 all the way up to 49 or 48,000. Well, now what's happened is we converged again. So we broke out here, and you'll see the Bollinger Bands got really wide, right? After that, Bollinger Bands started constricting again. They constricted again, and this time we had to break down. Well, how did you know we were going to break down? Well, it's because we were moving in a downtrend, right? So we're coming into a downtrend. We consolidated down. That's what happened. Now, we could have technically moved any direction here, but the fact that we had a downtrend and we're getting support, well, there's one key interesting thing about that. We are getting support here, right? This is where we got our major support and then broke back. This area that we got support on when we dipped just so happens to be our prior resistance area. So we flipped this resistance area here into support here. That's pretty interesting. And I got to change the color of this. I'm really sorry. I don't know why it's blue. It should be yellow because that's much easier for you to see. Okay, so we got that. So what I was trying to tell you is that this area here that we dipped to and we got support on was actually our prior resistance area. Now that's a very key thing. When you're flipping prior resistance into support, that's a good indication that you're bouncing upwards. So at this point, I want to change my time frame. I want to go look at the 4 hour now. Now, when I look at the 4 hour, I see something else that's very interesting. I see here that we actually came down and we got support on a very key moving average. We got support on this 100 exponential moving average. Now, what's interesting about that 100 exponential moving averages is that it's kind of squeezed us now between the 100 exponential and the 20, which is the blue one. This is a good thing. When you start to see the price getting squeezed between these upper moving averages, it tells you that you could be in for an even bigger boost to the upside. If we are, well, that 52K bullish confirmation for our major ascending triangle is still looking really, really good. Overall, both of these time frames are showing me good things. The other good thing I'm really seeing on the 4 hour that's key is the RSI. Look down here. You see that the RSI, I mean, I'm actually gonna, can I zoom out on this? So if we look at this RSI larger, you'll see that the RSI came and got oversold, right? Then it moved up above this 45 level, which I've always told you is a key reversal level. And now we're coming back down. Okay, let's go back to the main view. If we're coming back down here, well, there's a good chance that we come back down to somewhere around 46,000, 45.5, somewhere between these two moving averages, right? If we come back down somewhere between these two moving averages, that's our 45 level on the RSI. We could have another bounce when we hit there. If we do, well, that fits into our timeline for somewhere right around midnight that we see a bounce up. So both time frames are telling me the same thing, but this is obviously it requires a lot more information for this to actually happen. There's no reason that we don't just go sideways here, but it's looking like we could be gearing up for another bounce. And another thing that really sets that into stone for me as being a very valid possibility is that the 4 hour MACD also looks like it's about to flip bullish. So that's another thing there. Now we flip to the daily. When we go to the daily, now we're gonna look at kind of everything else that we've looked at. And the first thing that stands out to me on the daily chart is that we're starting to put in golden crosses. We have this 20 exponential moving average crossing over the other moving averages, and it is not far from crossing over the 200. If we see this 20 exponential moving average in blue cross over the 200 exponential moving average, which is here in red, well, that is a pretty major golden cross. And then if we start to see the orange moving average, which is our 50, and we start to see our 100 exponential start also coming up and crossing over the 200, basically, if we see this moving average go this way, if we see this moving average start going this way, and if we start seeing this moving average go this way, at the same time, this one starts going sideways and moving down, well, these are all major, major golden crosses, telling us that we are restarting a bull run. We are not quite there yet. This is the first step to see the 20 exponential moving average start coming and crossing. Step 2 is the 20 crossing the 200. If the 20 crosses the 200, that's going to be a major signal to me and every other trader out there that the tides might be turning and we might be really shifting to the upside again. So keep in mind, as soon as you see that, there's no reason that you don't see some bullish activity happening with it and pushing the price back up to 48, 49,000. Obviously, there's also nothing stopping us from coming back down, touching the bottom of this triangle at around 41. So I know that really puts things into perspective, right? I'm telling you, it's more likely in my eyes that we're going to move up, but we could still move down. I know, that's what TA is. gives you kind of the probability on both sides. I'm not telling you what's going to happen. I'm just telling you that everything I'm seeing is supporting that we may be having that major reversal we were looking for. At least it's looking like that. We don't know yet. We need confirmation. The confirmation for me still sits at 52K. I want to see how do we interact with 52. When we go up to 52K, are we just falling or are we starting to go sideways and really build another continuation pattern to go to the upside? That's what I'm going to be looking for. We're at 15 minutes, 10 minutes. Never going to happen. Never going to happen. That's basically what I'm looking at. Now we're going to zoom out even further to look at the much larger picture. And that much larger picture is this multi-month ascending triangle. And we have broken above this ascending triangle for the first time. Now, this is where things get even more interesting because we have had this resistance level for months. We've broken this resistance level right here, and now it seems like we have flipped it into support, okay? Basically, look at this 200 exponential moving average, the one in red, right? If you look at that moving average, let me see if I can zoom in and show it to you a bit better, okay? Let's do that. All right, there, you can see it a lot better now. So this 200 exponential moving average in red, you'll notice that even this one, even the 100 exponential had resistance on it. You can see the candles come up and touch it, right? But then you can also see this 200 was the major resistance. That's really the one we've wanted to beat the whole time, right? Since the time we started the drop, right? Since the time that we were at this major 69K all-time high and we started moving down, as soon as we went below that 200 exponential, that red moving average, we have stayed below it. We have not gone back above that moving average. And since that time, we've been in a major downtrend. Once you start crossing above that moving average, again, if you flip it into support and then you start moving up, well, that's a very good indication that you're going to start seeing all these moving averages start flipping up. Now, there's no guarantee, but historically, this is what we've seen. What I would recommend you do is go back on the BLX, the Brave New Coin Liquid Index chart. So go to TradingView, type in BLX, pull up that chart. It is the super historical view of Bitcoin. And then what you can do is look into any various area where you see similar patterns and look at how they played out. And you start to notice that when these ascending triangles show up, when you start flipping that major resistance into support, it's an indication that you might be very close to a breakout. Now, there's nothing to say that you don't come back down and bounce off again and then go to this apex and then have your breakout, right? But even if that was to happen, what's going to happen with the moving averages? Well, the moving averages are just going to go sideways and keep going up, right? So the moving averages are going to do exactly what I told you, even if we have that drop back to 42. So this is when things get really interesting, and you may not have too many more opportunities. This might be the opportunity zone. Very well could be. And honestly, if we start having the next rise of this bull run starting in May, June, and then take that to the end of the year, that'll be really indicative of something interesting because it's going into what we didn't expect to happen. It's going into this longer cycle that a lot of people have been talking about. And if this is a longer cycle, then the cycles are changing. So if you know anything about the 4-year halving and the Bitcoin halving cycles, well, what does this really mean? I mean, think about it. If we have another phase of the bull run starting in 2022 and taking it into 2023, well, the next halving is in 2024. So that means an actual bear market might only last like 6 months. Or this could be it, right? The next phase of the bull run could include 2023 and kick off even further with 2024. We have had the most inflation and money printing in history, and this is what Bitcoin was built for. So keep it in mind, this is super, super interesting. Let's move on to EGLD. Sorry, I guess this is going to be a 20-minute plus video. I guess we're not doing 10 minutes today. Sorry, tried. Not possible. Okay, EGLD. Super interesting, okay, with EGLD. What we're seeing with EGLD now is basically like the typical W pattern coming in, and these are very, very bullish. You're also seeing us coming into this golden pocket, and I really want you to pay attention to this, okay? We're looking at the daily chart for EGLD, and we're going to zoom out, okay? Look at how long-term of a chart this is. Look at this Fibonacci in the background. This golden pocket that you're looking at, which is this like blue highlighted area right here, that golden pocket it is based on a price of $6 as the bottom, right? That's our starting point. This is a very, very long-term multi-year Fibonacci, and usually some key levels show up when you look at charts like this. And now when we zoom out, you can really tell this golden pocket is a very, very important zone, because this is where, when we first hit $200 for the first time, it played as a resistance, and we came down and we retraced. We broke it again. It once again was a resistance. Once again, it was a resistance. When we broke above 200 for the first time, well, the golden pocket was the support. Right now, we fell below it. We tried to get a little support on it, right? But we still fell below it. Now, where does that take us to right now? Okay, I'm going to zoom back in. Now, what you're seeing happening is that we have had 3 attempts. Okay, this wasn't really an attempt to break out, but this was an area where EGLD came and got support on that golden pocket. Then we went below. We came back up, we hit resistance on that golden pocket. We had that crazy God candle where someone just bought a ton of EGLD, but I'm not going to count the God candle, right? We're going to look at the major pattern. This was our resistance area. We came back down. This, once again, is our resistance area, but we've gone above the prior time that we were here. I'm not counting the God candle. It doesn't make sense. That's likely a single person or single entity that made that purchase. I don't want them to account for the overall market sentiment. Overall market sentiment tells me that resistance happened in this area. Well, now we broke past that resistance and we went above higher. We actually went all the way to about 213. And now we are getting support here. Well, this is telling me that we are now constricting the moving averages. I mean, look at the daily chart and turn on the Bollinger Bands, right? Let's go ahead and get our indicators and let's turn on the Bollinger Bands. And what you'll start to see is that we're really now starting to go sideways, like we almost did here, but we dropped, right? But if we keep going sideways here and staying at this golden pocket, which is what I'm thinking we're going to see if we don't break out, we're either going to go up to the upside with a Bitcoin breakout, or we're going to go sideways and get constricted between this 180 to 200 range. And if we get constricted there, we're going to see the Bollinger Bands start coming up, right? And the Bollinger Bands will start to do that. And then as we get closer to that May area, I think we have a breakout. I think this May area right now, like towards the end of April, is really starting to look like the area that we might see a lot of major breakouts, unless things don't just turn majorly bearish by then for some odd reason that we can't account for. Overall, I'm still in accumulation, and I'm seeing everything telling me that things are reversing. These indications can sometimes be wrong, so don't make all your decisions based off of it. But at the very least, it's a reason to be optimistic, and it's a reason to possibly start looking into opportunities that you may want to take advantage of. I mean, if there is a chance that after the next month, we're going to have to pay a lot more for a lot of these things, this is the time to take advantage of it, should that be your choice. But do your homework. Remember, everything that I tell you is just a tool. I could be wrong about everything. So do your other homework and use this as a tool. For me, that's all it is too. I don't trade based off just TA. It's also based off just overall my sentiment on the market, the technology of various assets, like how I've distributed my portfolio, what level of risk I'm willing to take. So take all these things into consideration and look at other people's TA. Please do that. There's a lot of other YouTubers, a lot of other people on Twitter. Check them all out. Use all the information, all the tools at your disposal. Use them. Make your decisions. Hope you enjoyed this. Sorry it was 23 minutes, but I think we got a lot of info in. And right now, 197 for EGLD. So keep a very close eye on this, because seriously, if EGLD starts to break above the 220 level, I have a feeling that we're going to shoot up to around $280, because $280 is really where we have our next Fibonacci retracement line. And usually once you have a reversal out of here, out of the golden pocket, you tend to move up pretty quickly. And we saw that the last time, right? We saw that the last time here. This was a lot to do with like the exchange and all that stuff. But still, this is the kind of thing that you see when you cross over the golden pocket. You come and get support, and then you start having that bounce up. Before you know it, you're into new price ranges. So keep it in mind. Let's keep an eye on everything. Downward target, I'm still looking as low as 140, because that's our major support area. So if things take a turn for the worst, my orders right now, actually my orders sit all the way down to about 125 right now. I don't think I have anything lower than 125, but those are very small orders. My orders are starting to get heavier at around the 160 to 180 range, because that's where I see us bottoming out with the current patterns. Anyways, That's pretty much it, you guys. I hope you enjoyed that. I hope that gave you enough information for maybe this weekend and to take you into next week. And I'll try to have shorter videos for you this weekend. So I really only wanted to do 10-minute videos for one reason, so that I could do more videos. If I do a 10-minute video, then I can likely do shorter updates throughout the weekend. But I'm so busy with work and life and stuff, it's difficult to do that. So here's a 20-minute one to get you started, and we'll try to do at least one more 10-minute one this weekend, and maybe a couple next week if we can. So make sure you like, make sure you subscribe, make sure you let me know what you think. Leave me some comments. I will check you guys later. Thank you for joining me. I appreciate you all. And I will talk to you soon. Did I give you guys the bad view the whole time? Were you looking at this full screen view? See, I'm supposed to give you this view right here. This is supposed to be my TradingView view. Oh well, next time. Either way, thank you all for joining me. I'll catch you soon. Peace.